Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending on Thursday, actually, the 23rd of December. Of course, the week would have ended on 24th, but that was Christmas Eve, so the stock market was closed. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary trend direction and risk management model. We will come back to this chart in just a couple of minutes, but I want to move over to a weekly candlestick chart of the S&P 500 to get us started so we can get a big picture view of what has happened, and then we'll move to the shorter term chart here in just a couple of minutes. So to start off with, the S&P 500 was up 2.28% this week. Now remember, shortened trading week. We only had 4 days of trading, but yet up 2.28% this week, and we closed at a new all-time weekly closing high, 47.2579. on the S&P 500, and this was the second week in the history of the S&P 500 with a close above 4,700. So, very monumental week, guys. And obviously the Santa Claus rally happened, and hopefully that rally will sustain itself through the beginning of the year. But looking pretty strong so far. Now, the only other week in the history of the S&P 500 right here with a close above 4,700 was 2 weeks ago, and we closed at 47.1202. Obviously pulled back here, and we'll take a look at this in a shorter term chart. Pulled back for a week, and then that shot us right back up to new all-time highs, as we can see here. So pretty strong rally here over the last week. So heading into the year with a very, very strong performance. The next chart that we're going to take a look at here is an hourly candlestick chart of the S&P 500 that goes back to the beginning of November. So this covers just the last 2 months of trading. And what we can see here is over in the upper right-hand corner, the highs. And this was really on the last hour of trading on Thursday, the 23rd. We hit 47.4074. Now, why is that so important? Well, the all-time intraday high on the S&P 500 happened on November 22nd, as you can see here, 47.4383. That is the current all-time intraday high. I just abbreviated that ATIDH on 11/22. We came close here about a week ago where we got to 47.3199, where you can see my cursor circling, and then pulled back obviously from there, and then that shot us right back up here, and you can see that on part of the last hour of trading on Thursday the 23rd, we got 47.4074. So right now, that is the second highest intraday high ever on the S&P 500, second only to 47.43. Another thing that I think is kind of interesting here, if we look at 47.4074, well, that's just under 47.41, right? Pretty obvious. Well, the point is that, and this is me being a geek, I just love this kind of stuff, but right now, the only day in the history of the S&P 500 with trading above 47.41 was back here on November 22nd, so just something to kind of keep in the back of your mind there. Now, at the beginning of the week, on the 20th, we had traded as low as 45.3110, as you can see here. 45.3110 was the low on Monday the 20th. And that pullback on Monday appeared to be based on a couple of things. Obviously, the spread of the coronavirus here with this new variant, the Omicron variant. It's spreading quite rapidly. And then also there was some things going on politically. So the market had a negative tone to it to start the week. But that didn't last very long, as we can see here. And by the end of the week, we were trading really close to the all-time intraday high, but we did have a new all-time daily closing high on Thursday the 23rd at 47.2579. So that's a new all-time daily closing high, as well as, of course, as we've already looked, an all-time weekly closing high. So all of that happened on Thursday the 23rd here. And again, that's the second highest intraday high ever at 47.4074 on the S&P 500. Now, You know, look, I know a lot of people are very negative. I guess a couple of things here, guys. First off, just because we closed at a new all-time daily and weekly closing high, don't take that, as, oh my God, the risk is so high now, and that you can go out and short the market. All right, I would be very, very careful about that, guys. Just because things are at an all-time high does not mean they can't go higher. Okay, and as I pointed out on the video from a week ago, and you can go back and check it. I pointed out that once we get above this 4,700 area, which has been acting as overhead resistance for almost 2 months now, right? The first time we got up to this level was back on November 5th right here. And we've just been kind of dancing around this. We've had a few pullbacks, obviously, as we could see. We pulled all the way down to this 4,500 level. We traded as low as 44.95.12 during this pullback, right after hitting that all-time intraday high back on November 22nd. But we didn't have any hourly closes below 4,500 on the S&P 500, which I think is extremely valuable information to know. And of course, after pulling back to this area, and again, no closes, no hourly closes below 4,500, with a little dip right here at 44.95.12 on the 3rd of December, and that shot us right back up to this level here. We had a little bit of a pullback, and then what was interesting a week ago is we stayed above 4,600. So it looked like 4,600, and it was really acting as a short-term support level. There is, some trading right around here, but really a week ago, 4,600 was a very important level, with the lows from a week ago being 4,600.22 right here, 4,600.22. And then, of course, on Monday the 20th, we had that sell-off based on more spread of the coronavirus with this new variant and some negative political things happening out there. Market didn't like it, at least based on the cursory look. But as we can see, that lasted all of about a day, and then we got right back to an upward trend in the stock market. So, guys, this 4,700 level is extremely important, and I've seen this happen, over my decades of trading and being a professional in financial services. When you get to a level like this and you get a lot of trading over the course of months at a level like this becomes an extremely important level, in that if we can continue to close on a daily and then, of course, weekly basis above 4,700, this 4,700 level is then going to, and should at least, act as a very, very solid floor. Not that we can't drop below it, right? But it would become a very nice floor for us to build on, all right? And get, start going to 4,800, 4,900, 5,000 on the S&P 500. And, that could happen, anything like that could happen, in the first quarter to first half of or somewhere in the first half or so of 2022. So it'll be interesting to see if that does happen. But the converse is also true. If, right, over the next few days or few weeks, we roll back over and start to trade and close on a daily and weekly basis below 4,700 again, well, it looks like we might have more work to do. And at that point, then we're going to have to start watching these other round numbers. And any of you that have been watching my videos for a while, you know that round numbers 4,700, 4,600, 4,500, these round numbers oftentimes act like at least short-term support levels. We can see it here, we can see it here, we can see it here at 4,700. So just kind of keep that in mind, that any of these round numbers, now 5,000 will be a big one, right? But any of these round numbers that end in the double zeros, especially on the S&P 500 right now, have the potential to be at least short-term support and or resistance levels. So kind of keep that in the back of your mind. But right now, guys, market is looking pretty darn strong. We had a nice little Santa Claus rally here. Obviously, there's no way to tell, with all the news-driven volatility, a lot of this is news-driven stuff, right, that has happened over the last couple of months, especially last 6 weeks. But, keep in mind that even with the threat of the Fed tapering, the threat of the Fed raising rates up to, say, 3 times in 2022, the markets are still setting on a closing basis at an all-time weekly and daily closing high as of last Thursday. We've had the second highest intraday trading ever on the S&P 500 here, second only to November 22nd. So, let's listen to what the market is telling us and understand that, there may be more upside here ahead of us, okay? But keep your eye on this 4,700 level because that is an extremely important support level below where we're currently trading, and we sure do want to see that hold over the next couple of weeks. Before you go, make sure you subscribe to this channel so you don't miss future stock market updates and educational videos. Also, please give me a thumbs up on the video you're currently watching. And if you really want to be more successful in the stock market, please watch the How to Be More Successful in the Stock Market video that's on my YouTube channel. I will also leave a link to this video in the description box below the video you are currently watching. But the How to Be More Successful in the Stock Market video, guys, this is something you really, really need to watch if you truly want to be a more successful investor and trader.